let's get started. Now, the agenda that we're going to be covering today are buy-to-let trends and flexibility with Together. Then Maeve is going to cover solutions for unexpected landlords, followed by Nick, who will be covering the submission routes with Together. And as I mentioned earlier, we'll be covering any questions at the end. So, Maeve, I understand that you've collated a few questions from some of our partners in regards to buy-to-let trends and opportunities. What questions have you got for me?
Oh, are you ready, Michelle?
I'm ready.
So the first question up for you today is, are you seeing more customers borrowing through a limited company structure following the recent taxation changes?
Yeah, so since 2016, there has been an uplift of 332% of buy-to-let limited companies being set up to purchase buy-to-let properties. So that's a massive percentage over that period, and it's now hit over 400,000 of these companies set up for these transactions. So naturally, there are taxation savings by owning properties in a limited company structure. And last year, there was an increase of 23% from 2023 of already what was a record-breaking year for the volume of buy-to-let limited companies that had been set up. Now, at Together, the past 12 months, what we've seen is on our applications that have been submitted from our broker partners, about 45% of applications were in fact for limited company structures. And so far this year, year to date, about 46% of our applications for buy-to-let have been for limited company structures. So whilst it's an incline, a small incline, sorry, it's still an incline, and we expect to see that continue to grow.
So with that continued growth, Michelle, can you talk us through whether or not you have any different criteria for limited companies?
Yeah, so probably the main one is we'll always require the customer to have their own solicitor acting on their behalf for the transaction. But aside from that, the only other key difference is the way in which we assess affordability, in the sense that for a standard buy-to-let, so your buy-to-lets, your HMOs, MUFBs, is we require a ICR coverage of 120%, as opposed to the wider tax bandings of 125 and 145. But outside of that, actually, what we're seeing is for holiday lets, for example, we have a very flexible affordability assessment, which is enabling customers to purchase their very first holiday let within that market to benefit from the profit that these types of transactions can bring, because of our flexible on assessing affordability. And more details on that you can certainly find on our chalk section of our website. But what we're also doing and what we can do is second charges on limited companies, in addition to your standard refinances on limited companies. So we can go up to 70%. So if you're finding that you're struggling to place a further advance for a customer who has their buy-to-let is in a limited company structure, then do consider us for the second charge piece as well. And then another thing that we do quite a lot of here at Together for these limited companies, which is a criteria that proves beneficial for us, is first-time buyer, first-time landlords, and in particular overseas nationals and overseas residents that are investing their first property in the UK, setting up a newly structured UK limited buy-to-let company. So that's certainly a trend that we're seeing, and that flexibility of our criteria that I've just gone through is just a few of the things that we do differently. So there's nothing other than needing a solicitor to act on the customer's behalf. Everything else is very flexible criteria.
Fantastic. So you mentioned trends there, Michelle. Could you take us through some of the trends and opportunities that you're seeing in the buy-to-let market right now?
Yeah, 100%. So The key one is portfolio diversity. So diversification of portfolios, I should say. So what we are seeing is we're seeing professional landlords that are diversifying into different areas, different investment properties, such as student accommodation, in
Mhm.
addition to social housing, serviced accommodation. So Airbnbs is another one that can return a decent level of profit. And as I think many other lenders are finding this as well, as the continued change from standard single family lets into HMOs. So we're seeing, and we'll continue to see a lot of refurbishment into those properties. In addition to that, what we are seeing is resilient landlords that are purchasing in regional areas where the property values are lower, because this can help mitigate the risks and obviously help reduce the stamp duty costs that they will see more of after the 1st of April, unfortunately. So, but areas such as Manchester, Liverpool, and Birmingham are attracting a lot of growth. So, great opportunities for investments in those cities. It's certainly not only a great area for them to help those that are in need, but also gain a strong profit from those types of properties.
Perfect. So there's definitely lots of opportunities. Thank you for sharing those. Could you take us through, in your opinion, why it's very important for brokers to be working with specialist lenders for their landlords' needs right now?
Yeah, well, specialist lenders bridge the gap, where the high street lending criteria perhaps is a bit more restrictive.
Mhm.
So customers who've been turned down elsewhere, such as a customer purchasing a flat above a hairdresser's, a customer who's a first-time buyer, first-time landlord, an overseas resident, potentially from a higher risk country that's been turned down elsewhere, and also those buy-to-lets where there's yet to be a lease agreement in place. Those are many areas that together we certainly have solutions for, but those are reasons as to why brokers should be working with specialist lenders, because you may have had a case or even a customer's gone direct to a high street lender and been turned down, but there pretty much is majority of the time a solution for that customer. It just might be with
Mhm.
a different lender than what they first thought.
So, thinking about the customer for a second, can you give us, I don't know, let's say the top three reasons why customers work with together on their buy to let transactions?
Yeah, definitely. So, flexibility on income and affordability. So, what we can utilize is, say, for example, if the applicant has got a long lease with a corporate structure or a local housing association, that we can actually assess affordability of the lease agreement as opposed to the market rent, which can certainly help with affordability. But we also have no minimum earned income. So with some of the
Mhm.
lenders that have got the minimum earned income, that does not apply to us. Another section is, I mentioned before, first time buyers, first time landlords. So they do not need to have their own residential property in the UK. Same goes for an overseas national, an overseas resident purchasing in the UK. They don't need to already have a footprint in the UK in order to buy that with us. And that applies for your standard buy-to-lets in addition to your HMOs and your holiday lets. And then finally, I think you said three. Finally, I would say second charges for buy-to-lets is a massive USP for us, not only for the limited company structures, but in personal names, subject to the whole structure of the application, because we are able to fund certain types of applications without the need for any external solicitor involvement. We can turn funding around in within 2 working days. So that's the main reason. And that also applies to your refinances, capital raise, unencumbered equity release cases as well, that we can do it that quickly as long as we've got everything that we need day one. So is that me off the hook now, May?
It is. You're done. Thank you very much.
Um, So, we've discussed a lot about investment opportunities. However, some customers find themselves in an unexpected circumstance of becoming an accidental landlord. So, Maeve, as our head of
Yeah.
personal finance, I've got a few questions for you. So, what is the difference between a portfolio landlord and an accidental landlord?
Well, I'll probably take you through just a little bit of history. So, consumer buy-to-lets came about as a carve-out in 2016, back when the Mortgage Credit Directive. The objective of the regulator very much was to provide a greater degree of protection for individuals that had become a landlord driven through circumstance as opposed to a desire being someone whose intention was always to be a property landlord with a huge portfolio or a portfolio. It is still a buy to let to all intents and purposes. It just comes with greater regulatory protection and also requires a different set of permissions. So you need to have a different set of permissions if you actually want to sort of arrange a consumer buy to let mortgage. So the difference between the two is consumer buy to let is driven by circumstance, whereas a property landlord is someone whose intention always was to be a landlord from the beginning.
And when might a security be considered a consumer buy-to-let?
So it's an interesting one, actually. Sometimes this actually differs between lender, but it is actually very clear. So some circumstances where you might find yourself having a consumer buy-to-let asset and an accidental landlord. The obvious one would be if you'd inherited a property. So if you'd actually inherited a property, maybe from grandparents or parents. Another scenario might be if you are relocating. So let's say, for example, you currently work in London, you're relocating to Manchester, you own your own residence, but you are now going to go and let that out because you're going to be either provided accommodation by your employer or you're going to be renting somewhere else. It could be that your personal circumstances have changed. So perhaps you're in a relationship, perhaps you're now moving in with your partner. Again, you currently own your own residence, but you're going to be moving in with your partner and living together. You may then choose to rent out your existing residential property. Other scenarios could be sort of upsizing, downsizing. So it could be that you're expanding your family, or equally, it could be you're finding yourself where you're in that sort of empty nest period of your life where your children have actually thrown the nest and you are actually looking to either get a bigger or a smaller property, but you want to obviously hold on to what was your family home and rent that out. So again, that would be another scenario. And I suppose the last one would be similar on that theme, but around where elderly parents are actually moving into assisted living. So they're moving into assisted living, but they still very much have that personal attachment to what was their family home. And it can also help with children with supporting the care of their family moving into that assisted living. Because whilst this might all be circumstance driven, it definitely presents an opportunity for these accidental landlords for two reasons, really. The first one is if they're renting it, it bolsters their income. It becomes an additional income stream that they didn't have before. And so that opens up opportunities in the future. But also, they've now got an additional asset. And that additional asset, should they wish to do so in the future, could be something that they could use to release capital from to achieve either their personal or their property ambitions.
Fabulous. And just on that point, because as you say, other lenders will assess things in different ways. So we have got a fabulous support team in our head office that if you do need guidance as to whether or not together assess it as a buy-to-let or consumer buy-to-let, please get in touch with a member of that team. So how is affordability assessed with together on the consumer buy-to-let products, Maeve?
Affordability is obviously assessed on the rental income. So it's based either on a 125, 145 or 165 rental coverage. So it is based purely on the rental income. The interesting thing is if the property, as an example, Michelle, is not currently tenanted, which sometimes does happen, they might be in the process of actually putting a tenant in there, but they want to do some works to the property to get it up to a standard. We can also work off projected rental income subject to getting that confirmed from a reputable estate agent. So it is all rental income.
Yeah, fabulous. And that's the same as well as great one of our USPs on the buy to let side too, being able to
Yes.
utilize a projected rental income if there's not a lease agreement in place just yet. Um, so if a security is vacant with no rental income being received, but it's about to be tenanted, is there a
Yep.
gap we need to the maximum gap as to when they have to have that property rented by?
So obviously we would want to know that it's like within the next sort of few months. So we would be saying sort of no more than 2 month period really. But again, in terms of the affordability piece, so long as we know that it is going to be, we would just work to 90% of the projected rental. So what we're expecting from an affordability perspective.
Fabulous. And finally, Maeve,
Yep.
what's the maximum LTV that we can do on these types of transactions?
75% loan to value, and our current proposition is both for first charges and second charges.
Wonderful. So there's lots of solutions there, isn't there? That
Definitely.
if they've got, a great rate on their first charge mortgage, and
Mhm.
refinancing doesn't make sense, then, work with lenders like ourselves to support potentially with a second charge to help realize even further property investment or for
Mhm.
many other purposes for those funds. So lovely. Thank you so much for that, Maeve.
No worries.
Okay, so Nick, last
No.
but by no means least, so many of our partners have seen that we've expanded into network and clubs. So that commenced March last year, and it's been growing month on month. I guess could you please share the reason for everybody on this call why we expanded our panel into this space for them to submit their buy-to-let and consumer buy-to-let applications on our new portal?
Absolutely. Hello again, everybody. So if we look at the context, first of all, we actually did go live into a trial period in March of last year. Officially, we actually only launched back to market the 1st of October via a scaled launch. So we are still very much in our infancy as a channel, having not even sort of reached 6 months old, really, in terms of our official time out in the market. But if I go back sort of several years ago, 5, 6, 7 years ago, it was a lot more difficult to find your way to a lender like Together. If you think about the sort of the traditional aggregator systems, the traditional way in which brokers would have undertaken their research, it was tended to be rate driven. You could put very little of a customer characteristic into a sourcing platform, and get the right answer. It meant a lot of heavy lifting on the broker's part to be able to do a little bit of ringing around, investigating, research, and so it was very, very difficult to find your way to lenders like Together without engaging the services and support of packaging partners who perhaps knew that market and knew those kind of areas a little bit more. But that tech has evolved quite significantly. Now sourcing platforms are able to cater for more detailed scenarios. It's not just product led now, it's more around it being able to input lots more of the granular detail around the characteristics of a customer's circumstances. You can now sort of also include areas like affordability and really get into the detail of that specific customer. So the outputs that come from running those scenarios through the system are more targeted and more accurate. And it's never been easier than it has now to find your way for those type of product solutions to a lender like Together. And as it becomes easier, given the fact that first charge residential, consumer buy-to-let and buy-to-let are very much the staple diet of network and club brokers, it absolutely makes sense for us to be more inclusive. We've certainly had a huge amount of demand from our network and club partners, to open our doors to give access to those kind of products to that cohort of brokers. And as a result of our scaled launch, which has been hugely successful since the 1st of October, we're now up to over 20 distribution partners, opening our doors to over 20,000 of the 35,000 strong network and club broker partners. So it's really exciting times for us here.
Yeah, yeah. And Sunny's going to keep us busy as we continue to grow there. So I mentioned earlier that we are flexible with the likes of holiday lets, and we're seeing a growing trend for second charges, both limited company second charges, standard buy-to-lets, and with consumer buy-to-lets. What are the submission routes for these type of specialist products, given that the portal doesn't currently have access to those products?
No, and it's probably rightly so at this stage that it doesn't. I think what we're doing, having returned to this market, is we're learning more about our network and club partners, in the engagement of where do their expertise lie, where do the specialisms lie, how do we want to evolve our tech to support those kind of product lines going forward in the future. But I think our viewpoint is very, very much at the moment that, look, we don't want to run before we can walk in this area. And we also have a number of trusted partners of packages that absolutely understand the DNA of Together. They understand how we work. They understand the requirement for holiday lets and for second charges and those kind of areas, to the type of heavy lifting that's needed to be able to satisfy the underwriting inquiries, to be able to anticipate the type of questions that are going to come up. They are perfectly poised to be able to support that type of stuff. So as things stand right now and in the immediate future, for sure, we're going to be saying, look, we've got some excellent trusted partners here. The details of which are on our website. We would absolutely encourage brokers to be able to engage with those companies, and if they're not sure of who to speak to, then we can certainly put you in touch, and match you up with your perfect packaging partner to be able to get that case through to us.
Thanks, Nick. So, as you say, we're seeing great demand from our network and club brokers that are working with Together. Could you share some recent case studies submitted by network and club brokers through the portal and the reason why they came to Together?
Absolutely. I was looking through the list of all the different cases that have come through to us since we went live. I was quite surprised how many different scenarios and circumstances they were. But if you think about, and we've talked about this a lot already on this webinar, if you talk about our lending appetite as being as being the sea, the fishing net that Together has compared to other lenders would be overwhelmingly significant. It would be huge. Whilst other lenders may sort of focus their fishing on certain sectors of the sea, and quite fish quite well within those, ours is a lot broader. And I think ours is a lot broader because of the fact that we have a number of channels such as community housing and commercial area. We've got a number of other origination channels outside of intermediaries that specialize in certain sectors. And what that enables us to do is to be able to gather the insights at a more granular level from those different sectors and build a much wider risk appetite that we can then bring to the intermediary market. So I would say that's a huge, huge USP for Together. So what that does mean is that we see a vast array of different types of things, but I think a lot of those have been covered today. I mean, for example, one of the things that we've talked about today has been purchasing residential property through guaranteed rent schemes. The feedback that we've had from some brokers is they've really found those kind of things difficult to place. And I had to say, it was quite surprising how difficult they found it to be able to place those cases, which to us seem actually, it's bread and butter. If it's with schemes like Serco, MERS, Clear Springs, and Nacro, they're the kind of things that we're really, really comfortable with. And yet brokers seem to find it so hard to find that support from other lenders. But our strength doesn't just come in terms of those schemes. It's also in the fact that we have that layer, the ability to be able to layer complexity. So, we have a number of unique selling points around non-standard property, around, I've already talked about those kind of areas, the fact that we consider foreign nationals being able to buy in SPVs over here as well, so you start to build up a picture. But if you start to combine all those elements, it just reduces the number of lenders on the market that are able to support those. But that's where Together blooms, and that's where we come into our own. You've got a landlord that's looking to buy an SPV, and he wants to buy a residential property with solar panels on the roof. That's something that we can support, but it's surprising how many can't. If we look at one other scenario, just moving away from sort of the unregulated side and looking at consumer buy-to-lets, one that really struck a chord with me was a lady that had gone through a separation. And I don't think it was a particularly happy separation by the sound of it. And as a result of it, they'd run into some secured loan arrears, which had occurred, which is an unfortunate byproduct of those things sometimes when it's not particularly harmonious. And the parents had stepped in and repaid off the loan for her, so that they'd cleared her mortgage and everything was hunky dory. She'd now found a new partner and was looking to move in with them and convert her existing residential property to a consumer buy-to-let and capital raise to be able to give that cash back to her parents. Now, the story is really compelling. And it's one that Together we'll listen to and support day in and day out. But it's surprising how many don't, because as soon as you start to layer those circumstances, the less appetite there is. And that's definitely the case with high street lenders, because you're starting to move away from formulaic things where the credit score is more important, where consumer debt indebtedness and that type of thing is more scrutinized. Where in our side of the draw in specialist lending, that's something that we're able to sort of just move away from the formula, from the system-driven decisions, and start to take more of an open-minded approach to support those customers.
And you know what I've certainly found since I moved on from high street lending many moons ago into specialist space is that it's a can-do attitude here Together. So we look to find a way to support customers with their financial needs, as opposed to looking for a way to say no. And one final question for you then, Nick, is could you also share examples where we work closely with our packaging partners on specialist cases that they've been supporting our network and club partners with?
Absolutely. I mean, the one thing I will say is every network and club, or the majority of networks and clubs, have a panel of preferred specialist brokers or packaging partners that they prefer their members to use, and the vast majority of those we support as well. We have them on panel. We have a panel of what we call gold partners. Now, they're gold partners for a reason. They're gold partners because they're the ones that know us, understand us, and can demonstrate that through the volumes that they've provided, and not only the volume but the quality. It's the combination that makes it so important for us, because that really demonstrates, imagine it like a trust pilot kind of thing. It really demonstrates that these specialist packages understand us, they know how to work with us, and they can get successful outcomes through working closely with our underwriting teams. So that's a really important aspect that we don't shy away from. We really promote that when we go out and talk to network and club partners at the conferences, at roundtable events, and things like that. And we do make introductions to those partners when we're at those events as well. We're really keen to make sure that we keep that collaborative approach. It doesn't end there as well. We do like to work jointly with those partners to set up educational events to be able to support brokers who are looking to get into specialist lending or grow their knowledge and expertise in this area. We've recently undertaken a round of lunch and learns through Michelle and Maeve's teams to invite network and club brokers to learn more alongside our trusted gold partners as well, so that we can sort of help to educate not just on the kind of stuff that will go through our network and club portal, but the entire suite of specialist lending products that we have. And the one thing that I would say that we support really well is encouraging our high street brokers, our network and club partners, to ring us and contact us directly through our mortgage support desk. Talked about their case, talk about the solution. If it's one that needs the support of one of our packaging partners, we can put you in touch with one of those. We can do that warm handover, and also we can do that handover with the surety of this is a deal for us. This is something that we very much can do, and here is the conduit of how you can reach together. So we work really closely with them. We encourage them to be part of the conversation. There's one thing that I'll say, and I say it in webinars, I say it in the roundtable events I go to, and the panel debates that I have. There are two key partners that any network and club broker and any broker in the country can have right now. One of them is making sure that you are comfortable with your network or the club partner that you've got, and that you are maximizing the education that they can provide and the support that they can provide, because some of it's exceptional. But also make sure that you are tying in and engaging with some of those trusted packaging partners out there, because their wealth of knowledge and expertise is absolutely huge in every aspect. It's their bread and butter day in and day out. If you think about, the fact that high street brokers will have over 100 lenders to deal with. That's 100 lenders that you need to be really close to and understand how they work and what their criteria might be. Those specialist partners probably have 10 to 15 lenders that they work with, but they understand them on a much more granular level, and they have those kind of relationships with the underwriters that go beyond the pale, if you like, and they have such an ability to be able to build and structure deals that can be far outside of the box in terms of what those solutions are. So there's plenty of support that we want to give to encourage those continued relationships.
Thank you, Nick. And I suppose in addition to providing funding solutions to your customers, regardless of which route you need to go through to enable that submission, because if it is a more complex case, a specialist case to go through a packager, in addition to finding a solution for your customer, it's also helps profitability for yourselves as well by gaining that commission instead of perhaps just passing it on to another brokerage. So thank you to all of our speakers today. I'm just going to go through the chat box where we've had some questions in. I've seen a couple that I will answer, but then I'm going to share some of the others out with the rest of our speakers today. First one is, do you offer buy-to-lets where the applicant lives in a small part of the property? The answer is yes to that. But what we'd like to understand is the percentage floor space that the applicant is going to reside in. So say, for example, if it's a really large HMO, 8-bed HMO, for example, and the applicant is going to continue to live in one of the bedrooms within that HMO, what we'll calculate is the floor space of their bedroom, any communal spaces such as bathroom, kitchen, lounge, hallways, and providing that's less than 40% of the overall square footage of the property, then we can still consider that as a unregulated transaction. It's only if it goes beyond that 40%, then we'll assess it as a normal regulated mortgage contract. So for us, it's understanding the size of the property and the percentage share. But as I say, that does have to include communal spaces as well, including gardens and garages that may be used by the applicant. And then the next one is the international residence offering. So I mentioned earlier that we do a lot of business for overseas nationals, and including applicants who are either residing or are a national of a higher risk country. It does mean just some additional due diligence that we'll undertake on there. We've got specific product offering. The rate may be slightly higher than our standard offering because it's to reflect the risk, especially for those who do not have permanent residency here in the UK with a clear credit footprint. But we've got a solution for them, and that solution could be to purchase their first buy-to-let here in the UK, and then as they're expanding, there may be other solutions out there in the market for them, but they may not be because of the country that they're a national or resident of. And that's where you can work with our team, our support team. And one of our previous webinars, we were actually just purely focusing on overseas nationals, so that's definitely one to go and have a watch of.